Build your dreams, live rich, and leave rich.
Welcome. We're here to talk about a blueprint for financial peace. Now, this is all based on a really simple philosophy. To live rich doesn't mean living lavishly. It means living peacefully. And today, we're going to break down a method that's designed to help you build your wealth calmly and, most importantly, consistently. So, let's dive in.
Let's start with a really fundamental truth about how money works in the markets. It's an idea that really separates the fortunes that are built from the ones that are lost. See, the market isn't about luck. It's a transfer of wealth, plain and simple, from the investor who acts on emotion to the one who acts with a plan. It doesn't reward hope, and it doesn't reward fear. It only rewards education and discipline.
So that's the real question, isn't it? How do we invest without our own feelings, our own human emotions, sabotaging our best efforts? Honestly, answering this one question is the key difference between a journey that's filled with stress and anxiety and one that leads to peaceful, steady wealth creation. It's all about learning to be that educated investor. For so many people, investing feels just like being strapped into a wild roller coaster. The highs are thrilling, right? But those sudden drops, they can be absolutely terrifying. And it leaves you feeling completely powerless. But what if? What if there was a way to navigate this ride with total calm and control? A way to turn that fear into your advantage?
Well, there's actually some fascinating science behind why we feel that fear so intensely. Our brains are hardwired with this powerful survival instinct called loss aversion. And what it means is that the psychological pain of losing, say 100 rupees, feels twice as bad as the joy you get from gaining 100. It's this deep-seated instinct that causes us to panic during market dips and make the worst possible decision, selling at the absolute bottom.
Let me put this into perspective for you. Think about your house. If you heard its estimated value dipped a little for a month, you wouldn't rush to sell it, would you? Of course not. Same thing with gold. You see them as long-term assets. We need to start treating our investments with that exact same owner's mindset. But that's easier said than done when our emotions get in the way, unless, of course, you have the right system. And that brings us to the solution. It's a simple, powerful, automated system that basically acts like a seatbelt for your financial journey. It's designed to keep you securely in your seat, moving forward on a clear path, even when the ride gets a little bumpy. And that tool is the Systematic Investment Plan, or SIP. To put it really simply, it's just a preset instruction you give to automatically invest a fixed amount of money at regular times, like every month. But its real magic is that it completely automates discipline. It takes your emotions, your second-guessing, your fears, it takes all of that right out of the equation.
Here's a great way to think about it. Imagine a reliable bus. Your SIP is like buying a monthly bus pass. The bus itself is a mutual fund, a collection of investments. And instead of trying to drive and navigate the complex, traffic-filled roads of the market yourself, you just get on, find a comfortable seat, and let the professional driver, the fund manager, handle the whole journey for you. They get you to your destination safely and efficiently.
So why does this work so incredibly well? Well, it's really built on 4 powerful pillars. First, you get professional management. Experts are doing all the complex research for you. Second, your money is diversified, which means it's spread out to reduce risk, instead of betting it all on one thing. It's also really accessible. You can start with a small amount. But the real game changer, the true cornerstone, is discipline. Because it's automated, it makes investing consistently almost effortless. Okay, now let's pop the hood and look at the real magic behind the SIP. There's this incredible core mechanic that completely tames the ups and downs of the market. It actually turns volatility from something to fear into a huge opportunity. This whole process is called Rupee Cost Averaging, and it is beautifully simple. See, by investing the same fixed amount every single month, your money automatically buys more units when prices are low and fewer units when prices are high. And what happens over time? Your average cost per unit naturally gets lower. It's an incredibly elegant solution that lets you buy low without ever having to guess or time the market.
And when you put the two approaches side by side, the difference is it's night and day. The SIP method is that steady, disciplined climb on the left. It's a journey. Lump sum investing, on the other hand, often becomes that risky, stressful leap on the right. It relies on trying to guess the absolute perfect moment to jump in, which, let's be honest, is nearly impossible to do consistently.
All right, so you're on the journey. Your seatbelt is on, but what if you could hit an accelerator? Well, there is a very simple tweak you can make to supercharge your SIP and get to your financial goals way, way faster. And that accelerator is called the Step Up SIP. The idea is just brilliantly simple.
All you do is increase your monthly investment amount a little bit each year, usually right around the time you get a raise. So as you earn more, you automatically invest more. It makes sure your wealth-building engine is always growing right alongside your career.
And the long-term impact of this one small change? It's staggering. I mean, just look at the difference on this chart. A standard SIP builds some really impressive wealth. But the step-up SIP, that small, disciplined increase every year, just dramatically compounds your growth, creating a much, much larger final amount in the exact same amount of time.
So what is the whole point of all this? I mean, it's not just about watching numbers go up on a screen, right? It's about creating a real blueprint for financial peace. It's about translating these strategies into the freedom to actually achieve your biggest life goals, whether that's a secure retirement, your child's education, or just the ability to live life on your own terms.
Let's make this really tangible. Just look at this number. Now, that's not a lottery win. That is the potential result of consistent, disciplined investing over 30 years. It just goes to show you how a steady, simple plan can transform regular savings into truly life-changing wealth. This is the power of compounding in the real world. And this table here, this shows you exactly how that journey plays out. Take a second and just look at the jump in wealth from year 15 to year 20, and then look again at the jump from year 25 to 30. The growth isn't a straight line. It accelerates like a rocket ship over time. The real magic here is simply the combination of time and discipline, letting that power of compounding really take off.
Now, knowing the path is one thing, but staying on it is the real challenge. It is so important to avoid these common mistakes, things like panic selling or trying to guess the market, but especially stopping your SIP when the market is down. That's like jumping off the bus right when everything is on sale. It completely defeats the entire purpose of Rupee Cost Averaging.
And you know, the best part about all of this is that getting started is actually really straightforward. You don't need to be a market genius. Just follow this simple roadmap. First, define your goals. Second, pick a fund that matches them. Third, decide on an amount you can stick with. And fourth, this is the most important step. Automate the whole process. Just set it and let the system do all the heavy lifting for you.
So this brings us to the final and maybe the most important question. There's a wise saying that the best time to plant a tree was 20 years ago. The second best time is right now. Thanks for tuning in. If you found this breakdown helpful, please do me a favor and like, subscribe, and maybe share it with someone you think could benefit from it. This is Live Rich and Leave Rich by Krish.